My name is Moshe Milevsky, and I am a finance professor at the Schulich School of Business, that's at York University. And what I'd like to do today is to share with you 4 pointers on how to better manage your financial affairs. 4 tips on how to do a better job with your financial life. And these are the 4 tips: addition, subtraction, division, and multiplication. Now, I know that sounds pretty simplistic. Some of you might wonder, how can that help you with your financial affairs? But the fact is that when you think about it, almost every financial decision you face in your life, what I like to call every money milestone, can be looked at through the prism of these 4 arithmetic operations. And let me give you some examples. Let's start with addition. It's very important for people to understand that when they look at their assets, their investments, the money that they have in the bank, that is not the major value of their assets. The biggest asset that people have on their personal balance sheet, the biggest investment that they have, is themselves. The fact that they work, the fact that they produce an income, the fact that they're going to be generating cash flows for the next 30, 40, possibly even 50 years of their life, that's an asset, and that has to be managed together with all the assets that you have. Addition is about adding up all the assets that you have and not forgetting about the fact that the biggest asset is your own investment in yourself, your career, what you do, and how you manage that over the course of your life. The second of 4 principles is the concept of subtraction, knowing what to subtract. What many people often forget is that the liabilities that they have is not just the student loan debts, the credit card debts, the mortgage. A lot of people think that that's the only debts that they have, and once they pay those off, they have no more debts. People tend to forget other things that have to be subtracted. A lot of the activities that you do in life create liabilities, and those have to be subtracted as well. The principle of subtraction is, don't forget to budget for all the things you've committed to over the course of your life that aren't quite debt in the traditional sense. For example, retirement. When you no longer participate in the labor force, when you retire, when you're not working anymore, you are likely to live for another 20, possibly 30, maybe even 35 years. But you're not getting any income, you're not working. That creates a liability. That creates an obligation on your part to support yourself. Don't forget about that liability as you're managing your financial affairs. So the second principle of sound financial planning is to subtract off from your assets and your net worth all the things that you've committed to that you may not see explicitly but are sitting implicitly in your personal balance sheet. Third principle, division. Division is about making sure that you spread your fortune and misfortune evenly over the course of your life. My research shows that a lot of people tend to over-budget for events that are short-term in nature. What this means is, if you suddenly get a raise, if you get paid more than you expected, if you win the lottery, if you get a present, make sure to spread that evenly over the course of your life. Try not to over-consume early on and forget about the longer term. Spread your fortune evenly over the course of your life. When you're investing, when you're picking a portfolio, when you're selecting things to do with your RRSP, don't concentrate your money in one fund or one position. Spread it out over different asset classes. Spread it out over different investments. That's the principle of division. If, unfortunately, you suffer a loss or you incur a short-term expense, spread it out over the course of your life. Spread out your fortune and misfortune. That's principle number 3. It's the concept of division. The fourth and final principle of the 4 is the idea of multiplication. What's that about? Multiplication has to do with the fact that when you think about it, life has many possible paths that can evolve over time. It's very difficult to predict from one day to the next, let alone from 1 year or 1 decade to the next, what's going to happen in your financial future. The principle of multiplication is acknowledging that there are many multiple universes in your future, and to make sure that one particular path doesn't sink your entire financial plan. There's a path in which everything works out very well in your life, and there's another path equally probable where you run into difficulties. Make sure that you don't gamble on a particular path. And a good example of this is making sure that you have adequate insurance. In some paths over the course of your life, everything works out very nicely. You're never in a car accident. Your house never gets broken into. You never get sick. You never get ill. Everything works out fine. You don't need insurance in a situation like that. But in other paths, much more likely paths, you run into stumbling blocks along the way. And what you want to do is you want to buy insurance to protect you against those multiple paths that aren't as favorable. There are many other applications to this concept, but the underlying idea is exactly the same. There are many, multiple things that can happen over the course of your life. You want to make sure that you're prepared for all of them. You don't take a gamble on just one. In conclusion, the 4 principles, addition, subtraction, division, and multiplication, should help you do a better job of managing all the financial decisions that you face over the course of your life. Every time you face a money milestone in your life, whether it's buying a house, contributing to an RRSP, buying a stock, purchasing insurance, ask yourself how that decision is related to the 4 principles I just described. I know it's very brief. If you want to learn a lot more about these 4 operations and how they impact your financial affairs, feel free to read my book, Your Money Milestones, a guide to making the 9 most important financial decisions in your life. Thank you.